All right, so welcome to today's class, Module 5. We're going to be discussing on technical analysis, all right? And in technical analysis, you already know the drill. We're going to talk about price action. We're going to talk about top to bottom analysis. We're going to do every single thing you need to know about technical analysis, honestly. And I've told you many times that technical analysis is like the king of all, right? But the fact that it's the king of all, a king is not a king if he doesn't have people that is leading, all right? So same with technical analysis. It is good, but it is not independent of fundamental analysis. It is not independent of sentimental analysis. They all work hand in hand. Do you understand? They all work hand in hand. So now let's move on to what we are going to talk about with technical analysis. Number one is market trend. All right. First of all, if you are new to this class or you don't understand, you were not following us from the beginning, right? I would advise you go and watch Module 1, Module 2, Module 3, and Module 4. So you can get a grasp of what we are talking about here. Honestly, all right? But you can stay here, follow through. But you need to go and watch Module 1, 2, 3, and 4 so you can get a grasp of what we are talking about. So market trend. The market trend is a perceived tendency of financial markets to move in a particular direction over time. These trends are classified as secular for long time frames, primary for medium time frames, and secondary for short time frames. Traders attempt to identify market trends using technical analysis, a framework which characterizes market trends as predictable price tendencies within the market when price reaches support or resistance levels. When price reaches what? Support or resistance. Oh boy, I'd have left this thing open. Support or resistance levels. All right. Wow. I'm impressed. Support or resistance levels. So basically, and it varies over time. Okay, let me just come over with that again. Traders attempt to identify market trends using technical analysis, technical analysis is a framework that characterizes market trends as predictable price tendencies within the market when price reaches support and resistance levels varying over time, meaning support and resistance levels vary over time. Some areas are valid for a particular period of time. Some areas lose their validity or they completely go out of their validity after a particular period of time. All right. So a trend can only be determined in hindsight or hindsight, since at any time, price in the future are not known. Do you understand? Price in the future are not known. Types of trend, we have uptrend. An uptrend is formed when price of a trade is rising in value. The price begins, several traders, when the price begins or when the market begins, several traders take advantage of an uptrend to enter a long position to reach high price levels, meaning you are buying. In an uptrend, what you're basically doing is buying. Now a downtrend. A downtrend is formed when price of a trade is decreasing in value. When the market begins, several traders take advantage of a downtrend to enter a short position to reach low price levels. To reach what? To reach low price levels. Then we have the consolidation or sideways trend. The sideways trend is formed when the market remains static, i.e., the price neither reaches the highest or the lowest price points. So that is what we call a consolidating market. A consolidating market, the price has not made a decision whether or not it wants to move. So basically, some people call it ranging markets. All right, ranging, consolidation, sideways, anyhow. But it just means that the common resistance and the common supports. All right, whenever price gets to resistance, it bounces down. Whenever price gets to the support, it bounces up, basically. Then our price action. Support is a price level where a downtrend can be expected to pause due to a concentration of demand or buying interest. Assimilate what I'm telling you. Support is a price level. How I wish I have a board there, I would have shown you what I'm saying. So support is, let's say this is a price level now, right? Where a downtrend can be expected to pause, meaning the market is going down, or it paused. Why? Due to a concentration of demand or buying interest, because plenty of people want to buy here. So it came down here, people bought here, and it's reversed up. So that place where it got to before it moves is called support. So support is anywhere in the market the price got to before it started moving up. That is support. Anywhere in the market that price gets to and starts moving up is called support. It's called what? Support. Then we have resistance. Before we go into resistance, as the price of assets or securities drop or drops, demand for shares increases, thus forming the support line. Shares, I'm talking about shares of both the exchange rates, shares of a company, shares of a stock, shares of an indices, shares of cryptocurrencies. Everybody wants part of it. So that's why they are buying at that time. So what happens is that support line is formed because the price drops to a demand zone. If I tell you today that an iPhone, okay, I don't want to tell you how much is there. Let's use an iPhone, right? Or let's say this wallet, right? I tell you, or you know that the price is 1,000 naira. And tomorrow I tell you that the price has dropped to 5 naira. And you know how valuable this is. Will you or will you not rush to buy it? Yes or no? Talk to me in the chat box. I want to see everybody's comment. Will you or will you not rush to buy that thing from 1,000 naira? It drops to 5 naira. Will you buy it or you won't buy it? Let's see the investors. Okay, I'll buy it. I'll rush to buy it. Yes, I'll buy it. Yes, we'll buy. Yes, I'll buy it. Yes, we'll buy. Yes, I'll buy it. Okay, I'll buy 10. Evil boy. You say I'll buy 10. I'll buy 10. Okay. So basically what this means is that the price of the asset or whatever thing drops. It formed a support line where everybody needs it. That's a demand zone. So you buy it and it becomes a support. Just imagine there's no ball here. But imagine you throw a ball to the ground. It bounces up. The ground is acting as a support for the ball. If you bounce a ball here now, it will bounce up. Why? The price, that floor is acting as a support. Same with you, you stand on the floor. Why did the floor not throw you up? The floor is acting as a good support for you. The next is resistance. Resistance zones arise due to selling interest when price have increased. If you buy at 5 naira and tomorrow this thing turns to 2,000 naira, will you keep holding it or you sell half of what you have bought? Talk to me in the chat. This thing that you bought at 5 naira rose to 2,000 naira, will you sell it or you will keep holding it and say, okay, to get to 10,000 naira? Sell. I'll run. I'll sell. I also say I'll rush. Sell. Okay, everybody's shouting sell now. I will sell it. Okay. Let me wait for that evil guy to say if you sell all. If you sell all and wait for it to come down and buy again. Sell. Okay, makes sense. So basically what this means is resistance is anywhere price gets to and reverses down. Resistance is anywhere price gets to and reverses down. So if you look at the chart, you see those candles, you see the price, the candles move up here, it got here, you see it went down. What does that mean? Sellers are there. So when it comes there again, likelihood of it going down again is high. It is high. I'm not saying it will happen, but it's just likely that it might. Likely that it might. Do you understand what I'm saying? So that's support and resistance. Imagine you throw a ball up to the ceiling. It gets to the ceiling and falls down. What happened? The ceiling acted as a resistance for it. The ceiling acted as a resistance for it. Okay? The next is volume and momentum. Volume and momentum. Volume is a measure of quantity. Volume is a measure of quantity, meaning how many people, how much money, how many is a measure of quantity. Volume is a measure of quantity. So hold on. Volume is a measure of what? Of quantity. Volume is a measure. Let me see how my GBP trade is going. Okay, you're still good. This is a 1 to 17 risk to reward, and I risked 2% of my account. 2% of my account. I'm up 20 something K already. If it can fall down crazily, bro. Let's see. Let's see what happens. Okay, that looks good. All right. So volume is a measure of quantity. In trading, the volume is the amount of a particular asset traded over a period of time. The amount of a particular asset traded over a period of time is called volume. It is the number of units, shares, or contracts that change hands between a buyer and a seller. The more actively traded an asset is, the higher the volume will be. Meaning, how much are you keeping on the ground for this? How much, right? So we have one person buying, one person buying, one person buying this same laptop. The laptop's volume has increased. That's what it means, right? Because everybody, the laptop has turned to an in-demand quantity, an in-demand asset. Everybody needs that particular asset, all right? While momentum measures the rate of change in price as opposed to the actual price changes themselves. Momentum, meaning if rates, remember anyway, yeah, rates, time, there are two factors involved in rate, time and let's say change or volume or whichever thing, like, but time must be in anything here, rates, there's time in it, period of time, right? So if this took 1 day to go from 5 naira to 2,000 naira, and this took 2 weeks to go from 5 naira to 2,000 naira, they all got to 2,000 naira from 5 naira. But the momentum of this is higher. Why? This took a shorter time to get to a higher price. So when you look at the market and you see price move from year to year in 10 candles, that means the volume of that candle is high. But if you now see that price move from year to year in 2 candles or 1 candle, the momentum is high, the volume is high. So momentum is how many candles made this huge move. Volume is how long did it move. Volume is not concerned with how many candles made the move. So at the higher time or the time of the day when there is higher momentum in the market is usually when you want to be trading. Why? It will take shorter time to get the most output. It will take shorter time to get the most output. That's why you want to always be in the market at the time when the momentum is high and the volume is high, which is London session or New York session, because they both have the highest volume. And because of the number of activities that go on in that session, you only want to be there to move with the banks or move with the big boys in the market. I don't know. Is anybody understanding what I'm saying? Let me see the charts. Do you understand what I'm saying so far? Yes, and yes, coach. Yes. Great. So you always want to be in the market at the right time. That's why those that know me, they look. I love to trade news. Why do I love to trade news? Because that's where market is moving. News moves the market. Fundamentals moves the market faster than even your technicals. Your technicals work, but fundamentals move the market faster. So I love to trade when there is news, which is usually 1:30 p.m. or any other time. Actually, news can come up anytime. You can check anywhere. You can check to get the news, maybe on Finviz or Forex Factory or my FX book. You check to get the news. But basically, you always want to be trading at the time when there's high momentum. Like I said, volume is this thing, the price is going up already. Everybody's looking, okay, tell me an example of something in Nigeria now that is high in volume or that has high volume. iPhone X or iPhone 13 now, I mean. You were loved that. Can I take it again? I'll just rush. But remember, we have time we are working with. Actually, the reason we had to have this class early is because I have a meeting which I was invited for, and the meeting starts at 12. So I need to leave my house latest 11:30. It's about 40 minutes away from my house, right? So I don't know. Okay, cars, that's Benz. So let's use Benz and iPhone. Benz, everybody loves Benz. Everybody wants Benz. The volume of Benz is high. iPhone, everybody wants iPhone. The volume of iPhone is high. But guess what? Which one do people get the most within the shortest possible time? iPhone. Why? Because it is cheaper. One, two, it is more mobile. I don't know if you get what I mean. Three, people can afford it more than they can afford and afford a car like a Benz, right? So the volume of both of them, Benz and iPhone, is high, but the momentum of an iPhone is higher than the momentum of what? Of a Benz. Why? It took shorter time for iPhone to get to everybody than it took for Benz to get to everybody. Benz stayed longer before everybody had it. iPhone stayed shorter, everybody had it quickly. So in 1 month, 2 months, Apple was able to get everybody to have an iPhone. But guess what? Benz, it took them, let's say 3 months or 6 months or a year. So the volume is measured in how many people need it. While momentum is how long did it take for you to get to those people that need it? How long one candle moved it? That means there's higher momentum in the market at that time. So you want to hop in. You always want to hop in. I'll show you areas in the market where you can see high momentum. Let's go. Let's go together. I'll show you. Just watch. So now you see this particular time, I was in this trade. Oh, God is my witness. I was in this particular sale. Here, this was where I sold from actually. The highest point. See, look at this box I kept here. I sold here. I was in this sale. When it came up again, I told everybody to sell before it now broke our hearts. That was yesterday now. Before it broke our hearts yesterday. But I told everybody to sell again when it got here, but it broke our hearts. Anyhow, this sale that happened here, let's count how many pips market moved. Just follow me, please. Let's count how many pips market moved. In one candle, the candle started here, ended here, right? So the candle, 1 5-minute candle had 107 pips. Meanwhile, that's a 1 minute, that's a 5 minutes candle. How many candles did it take for it to recover that drop? So this means there's high volume and high momentum. Now, 1, 2, 3, 4, 5 candles it took to recover from this massive dump. So one candle brought it down, 5 candles took it back to that same level. Both of them have high volume, but one has higher momentum. That's why I said let's get in again, because the likelihood of it selling was high, but it broke our hearts. Market, you don't know anybody. Oh. Sorry, my alarm. Sorry. So that tells you that momentum is how many candles did it take to move this distance. Volume is how many distance was he able to cover. Volume is not interested in the time it took. Volume is just that he covered large, no problem. Even if it was going small, but he should covered it. No wahala. Momentum is he did it immediately. So imagine, will you love to be in the market these 5 minutes and make the money that someone will be in the market for 3 days to make? Which one sounds reasonable? You want to be in the market at these 5 minutes. And look, check the time, right? That 5 minutes was 12 noon. 12 noon is what? London session. Meanwhile, let's see how market is during Asian session. See all these tiny candles, tiny rubbish. What's this? 22 o'clock in the night. Guess which session is that? That is Asian session. That is Asian session. That is Asian session. That is Asian session, my dear. So do you want to be in the market during Asian session when market is going slowly? Look at, and mind you, that volume, how do we know that volume? From here. Okay, Asian session started by 9 p.m. So 9 p.m., which is here, market was able to move from 9 p.m. to about 7 a.m. this morning, or 8 rather. So this is 8 a.m., right? So market moved 113 pips, which means there was volume in the market too, but there was low momentum. There was high volume, there was low momentum. Why? Because the market moved far, but it took time. It took what? It took time. If you were in the market here, you made profit by selling. But guess what? It took time, my dear. Meanwhile, see what happened. All of these activities, it took how many candles for London session that just entered now by 8 a.m. that they started. See how they're moving fast, moving fast, moving fast. They know the game. London session, they know the game. I don't know. Do you understand what I'm saying? Is anybody with me? Talk to me in the chat box. Are you with me? Are you with me? Are you with me? I'm on this trade live, so I'll show you guys what happened. I'm expecting that this is a break and retest, so I'm expecting to start falling out from here. So if you want to take the risk with me on your demo, take it. Sell GBP right now. If you want to take a risk with me, I'm on the trade, just so you know. And I use 50 standard lots, so I don't waste money. I mean, I won't waste money on what I don't trust. Just sell with me. Let's go down. Let's go down. Let's go down. Let's go down. Let's pump this guy down. GBP USD. Long and short, let's go into the next thing that we're going to discuss. I'm actually expecting God, like by God's grace, we'll be having live trading session. We'll trade together, right? Then now let's go into the real deal, smart money concept. Woo! If you're excited for smart money concept, type 777 in the chat box. Smart money concept. If you're excited, type 777. Let me look at the chat box. Oh, someone said I'm loving this. Oh, nice. 77777. 77 everywhere. Let's go. It's plenty. Smart money concept. It's plenty. It's plenty. Coke pocket. Nice. So now let's move on. Smart money is the capital that is being controlled by institutional investors. Please follow me and make sure you're writing. You can screenshot this if you need to. Smart money is the capital that is being controlled by institutional investors, market movers, central banks, funds, and other financial professionals. Did you hear retail traders here? No, sir. Why? Retail traders are babies in this particular thing. Smart money concept is the capital that is being controlled by institutional investors, market movers, central banks, funds, and other financial professionals. Smart money was originally a gambling term referred to as the wagers made by gamblers with a track record of success. A supply zone is a trader's selling price area. This area is present above the current price with high selling interest. Oh, Jesus. Please pay attention. Above the current price with high selling interest. On the other hand, the demand zone is a trader's buying price area. This area is present below the current price with high buying interest. So in smart money concept, price moves from supply zones to demand zones. Your ability to identify correctly, pay attention to the words I use. I typed this, I didn't copy from anywhere. I typed this. So your ability to identify correctly supply and demand zones is your most invaluable asset. Invaluable, what do I mean? You can't measure the value. You can't measure it. Jesus, you can't measure. With smart money concepts, right? Jesus, I don't want to start boasting. Jesus. I've done a $2 account to 17K in one day. Smart money concept. Smart money concept. You are in for a big deal. You guys are in for a big deal today. You guys are in for a big deal. Smart money concept. Okay. God knows I'm not boosting, but you guys are in for a big deal. So now key factors in smart money concept. Number one, we have break of structure. Number one, we have what? Break of structure. Please make sure you're writing. When price continues to break previous structure, what do I mean by break previous structure? Follow me on this, please. Okay, so you see something here. Low, high. This was a high, the previous high. Market came and went above it. It broke that structure. This is one break of structure. I'll mark out all the break of structures I'm seeing on this place, right? Then we'll now look for the valid break of structure. How many people are on this GBP USD sale that I just called up now? So this is break of structure one, right? Another break of structure is here. Why did I say there? Went up, made a low, which we tested this place, right? Then went up above it, came down, we tested this place. So this market was going up, failed to make a new high. Let me delete this one for a moment, or let me lock it so that it doesn't distract us. Oh, it's distracting us. Best I'll delete them. I'll bring it back. So here now, you see something important here. Went up, came down, went up, came down, went up. It's supposed to break above this place, right? But it failed to break it. It came down, broke this lower structure one, broke this lower structure two. What does that tell you, please? It just broke two structures, please. What does that tell you? Market just broke two structures, please. What does that tell you? Market just broke two structures, please. What does that tell you? Market just broke two structures. What does that tell you, please? Market just broke two structures. What does that tell you? A reversal? No. No. Okay, yeah, sorry. I didn't understand what you're writing. Yes, a reversal. Because higher high, higher low, higher high, higher low, higher high. You failed to make a higher low. If you failed to make a higher high, rather, came down, cleared up the lower, the higher low, came down, broke the lower low, broke these two structures. What does that tell you? Market is going to fall down flat. So right now, it's just coming to pick the trade in smart money order block. When I say smart money order block, what do I mean? Look at smart money order block here. Let me mark it out for you. Who is on this GBP USD sell? Oh? See profit. Oh. See the smart money order block I just marked out now. The last buy candle before the massive sell that broke the structures. The sell that broke structure, the buy candle was where market came to tap. And I just took another entry actually, 50 standard. That was why I took my phone that time. I took one more entry because I saw what market just came to do. That other block is smart money concepts, basically, right? But I'll show you what's going to happen shortly. But I just only needed to point out break of structure for you to see. Change in trend, change in price movement. Exactly. So whenever I say break of structure, it's denoting what? A change in trend. So the uptrend is going to change into a downtrend. That's just what it means. So that's just what it means, all right? Then next is change of character. When price changes its trend, a line is drawn from the last high for downtrends or low for uptrends to the previous trend all the way to current price action. Let me explain. When price changes its trend, right? A line drawn from the last high. Oh, please just pay attention to what I wrote here. From the last high to previous, okay, from the last high of the previous trend all the way to the present price action identifies change of character. It changes the trend. The last high of the previous trend, current price action. So let's go there together. We'll do it as if we don't know what we are doing. We are novice. And I told you, markets always form M pattern. Okay, I've not said it before. M pattern before it falls. So that's why I'm expecting this M to fall. It's look at 1, 2, 3, and it fell. So I'm expecting M, yeah, then fall. But that's not what I'm talking about, anyways. So yeah, we see price changing. Let me delete this thing. We see price changing its trend, right? With a line drawn on previous high. This is the previous high. Okay, for downtrend. Why for uptrend? Say previous low to current price action. Where was the current price action level? This place where it broke, right? So this is change of character. Change of character. This is change of character. This is break of structure. This is change of character. This is break of structure. Does not mean market has broken structure. The structure might still be valid. It just changed character, but it's going back up. If it failed to break this low or it form another low, yeah, then that means the price is still valid. But it didn't, like this one now. This one now. Eh? Let me show you one now. Like this place here. Eh? As mean after making this thing price moving up, as mean price came back down and broke this lower low, then this was only a change of character, not a break of structure. But it came down and failed to make a lower low. Instead, we tested this high and reversed all the way up. So this is the break of structure. This is the change of character. Change of character is what occurred here. Change of character is what occurred here. This is, sorry, hold on. This is the change of character that occurred here. Because price would have easily reversed and continued the downtrend. But what validated the new break, what actually made us make our decision was this break of structure we saw. Break of structure that happened here. This was the break of structure when price cleared out the previous high. But this is change in character. Let me zoom out for you to see. This is change in character. This is break of structure. Change in character means as price came up, came down, went up to that same area. As when it came back down to reverse, it is what? It would have been a change in character. Sorry, this is not the break of structure. See the break of structure here. Let me show you. I'm sorry. Break of structure occurred here. This is the break of structure here. When price cleared up the higher low. So that's the break of structure. Not here. Sorry. I'm sorry. This is the break of structure here occurred there. But this is low. This is the high that made a lower low. This is the high that made a lower low. When price came here, this was changed in character. As when it reversed down, this place here was break of structure 1, break of structure 2. Yeah, that's true. Break of structure 1, break of structure 2. Because this is the low, this is the high that made a lower low. What do I mean now? Hold on, let me explain. We're seeing lower low, lower high. So the high that made a lower low, right? This is the high that made a lower low. When price came here, this break above is called break off. It's called change in character because this one would have easily reversed down. But when it came here and cleared up this higher pace and closed above successfully, so that was break of structure. So this is break of structure. This is change of character. Break of structure, change of character. Change of character happens with the most recent pivotal points. If it's a downtrend, most recent higher low or higher high rather. If it's uptrend, most recent higher low or lower high. You understand? So up in this is a downtrend. Change of character happens with the most recent higher high. Remember, this is a low, this is a high, this is a lower high, lower high, lower low, lower high, lower low. Then this lower high, this most recent lower high, when price came to clear it out, this was a change of character, not a break of structure. Break of structure occurred when price closed above this second lower high. This is the break of structure. This is the change of character. Who is on this GBP USD sell? Who is on this GBP USD sell? I'm asking one more time. Who is on this GBP USD sell? Okay. Anyways, that's just what it means. That's just what it means. Okay, so this is change of character. This is the break of structure. Break of structure occurred there. Then a retest of the change of character break. This is change of character. Price always comes to retest the change of character break like he did here. Price will come and retest the change of character break. Then we'll see it move upward. Then when it was coming down, it mistakenly formed an other block. So that was the other block I now picked. Me, I picked that other block one, but I previously entered at this other block. No, this is also another block. This place is another block. You might not understand what I mean by other block, but you will understand in the next conversation. So when it formed that M pattern, because I always love to see M pattern on GBP USD before I sell it. So when it formed the M pattern, so that was a good confirmation, double confirmation for yourself. So immediately it broke out of this M, I added new positions here. Those are the positions I told you I wanted to close out. So when the enter profit, I just close out some of those positions because I know price will come back. So we test this other block that it kept here when it was going down. Then we'll now see that move to the downside to clear all of this liquidity. This is a liquidity, this is a liquidity. It's called the trend line liquidity. I'm going to clear it, don't worry. You might not understand what I mean by all of these things, but just follow me. You're going to understand what I'm saying. Amen. Amen. All right. Let me follow. Let me go through the chat box. So are you saying that the break of the first lower high is a change of character? And if it eventually breaks the second lower high, it's a break of structure? Exactly. Change of character, break of structure. Exactly, you got it. So the break of the most recent or first lower high in a downtrend is change of character, while break of the second is break of structure. Same with this thing. Same with an uptrend. So that's for a downtrend. Then an uptrend, what confirmed that this sell will happen is first, this place here is change of character. When it finally came here to break this one, this is break of structure. So that's why I know that as I've broken this lower structure, you're going to see a sell. That's just it. Because it has broken this, just changed character here, has broken structure here. So that confirms my sell, right? But anyways, nobody's right, nobody's wrong in the market. Allow the market to do what it wants to do. Just follow through or follow the market. Ride with it. Okay. You need to rewatch this video, definitely. Can we say change of character is retracement? Something like that. Something like that. Yeah, we can say that, yeah. So we can say this just retraced. But where we now know that it not retraced, so it changed structure is when it now broke this lower place. So that's just what it means. Then now let's go into the next subject in line here. Liquidity. Please follow me. Liquidity is the buildup of stop orders residing on a trend line of equal highs, lows, trends, or weak. This is money that can be taken out. So liquidity is when you see if price come here, it goes up. When it's coming back, the people who enter there and put their stop loss down, right? It will do the same thing, goes up. When it's coming back, the people who enter there put their stop loss down. So their stop loss is the money that they are willing to lose. Liquidity is that position. So price will come and clear out that money. That means to break that structure, go below it. That's change of character now. Go below it and either go up or go below it and go down. But it will clear out that liquidity. So liquidity is basically the two, like where people mostly enter. That place where there's build-up of orders, maybe enter stop orders, right? So that build-up of entries is liquidity. How do you identify liquidity on the charts? How do you identify liquidity on the charts? So this is an area of liquidity, this is an area of liquidity, okay, now these two places now, there are areas of liquidity. Why? When market went there, came down, went up, came down. We were waiting for market to come and clear off this liquidity with heavy candles. They don't come with small candles to clear liquidity, they come with big candles. So they come and quickly clear off liquidity, like you saw here. After clearing up liquidity, now we are going back down, right? So it's a downtrend. it was just a change in character. Look at overall, we are still in a downtrend, remember. So it was just a change in character that they wanted to do to play our emotions. And after the change in character, we are seeing the downtrend continue. So that's liquidity. Okay. Then imbalance. Okay, let me show you imbalance before I explain it. So imbalance, when market moves up suddenly, like now, why the market have to come back down here after moving up? Because it moved up suddenly. So that gap that he left, all this gap now that he left when moving up suddenly is called imbalance. Follow me. All this gap that price kept here after it moved up suddenly, that gap is called imbalance. So price will come back down to fill it up like he did there, came to fill up the imbalance. Price is coming down to fill up this imbalance. That's why I'm still trusting this sell, because price needs to fill up this. When price came down, this gap is filled up. It went up to fill up the imbalance. Price might still come to fill up this imbalance, but I'm not sure. But price filled up this imbalance. After this big gap, price filled up this particular imbalance. So basically, imbalance is the gap that is kept in the market after price moves suddenly. After price moves suddenly. So the gap in a candlestick that is created when price moves quickly, it represents the orders that were left unfulfilled. All right, orders that were left unfulfilled, not that we are left, that were. Okay, orders that were left. It represents the orders that were left unfulfilled. It's also called. Sorry, hold on. All right, sorry. So it represents the orders that were left unfulfilled. It's also called inefficiency or fair value gap. Some people say inefficiency, some people say fair value gap. So there could be a change of character and not a break of structure. Yes, there could be a change of character and not a break of structure. There could be. But whenever there's a break of structure, most likely market has broken structure, so it will actually go down. Is imbalance the same as liquidity void? Liquidity void. I've not heard that English before. So I don't know what you're saying. I don't know too much. I'm just a small guy that's trying to learn, right? I don't know so much. So I don't know what you're saying about liquidity void. Well, let's check it together. Let's check it together. What is liquidity void? UBS is doing well. Let's see. Woo! Let's go. Let's go. Let's go. Let's go. Let me check my trade and show you guys, so you guys will see some money to motivate you this morning. Let you guys see some money to motivate you this morning. Sheesh, we are up 13K. I closed down some entries. So we are up 13,000 now. 13K USD. 14K already. And sheesh, we just hit 15K. Let's go, let's go. 17K, nice. Nice, nice. Wow. Money is easy to make, man. Just learn. UBS is doing well, definitely. That's why I just pick a pair and stay with that pair. So I'm still expecting to fall down more. But let's check what that our students was telling us about liquidity void. Liquidity void. So let's check liquidity void. So liquidity void, from what I'm seeing here, is sudden changes in price that occur in forex when price jumps from one level to another without enough liquidity. Okay. Well, thank you for this. I'm just learning it. I don't know it before. Oh, yeah. The same thing. So imbalance is liquidity void, you see? So everybody has different English for that. Who is on this GBP USD sell? Oh, thank you, Jesus. Make I use this and go buy Pepsi drink. Oh, GBP USD, my baby boy. On demo, no problem. If you had funded your account yesterday, you'd have made up some money today. I told you, fund your account yesterday. Blue Revex is there for you, but no, you no agree. Flying down on demo. Ooh, but don't be indisciplined with your risk. Some people say because it's Coach David that called the trainer, they'll go and put on the standard. To shock you. To shock you, eh? I'll laugh. Trust me. Let me close out the lower position. It will just shock you, like I'll just laugh anyhow for you. So I just close out some positions now. So I'm closing out some positions. So I just left only one position open, 13K. That's the first position I entered. If it goes down and retrace it again, I will enter again. Big account is big. You can get a big account now, funded account now. I'll show you how to do that, don't worry. Like they'll give you accounts to trade with. How do you think I got money to trade? Where did I steal money? Where did I steal $100,000 to trade? So how do you get your profit? They'll send you your profit automatically now. What happened just now? So they send you your profit, but that's by the way. Let's move on to what we are talking about, please. Then next. Next is supply zone. Okay, so supply zone is an area of the market where price fails to move further up. Thus fell from. I told you already. That's a resistance. Bullish order block. Important. It's the same as supply zone, but it highlights the last bullish candle before a massive drop in price. Please follow clearly. If you understand this order block, you can change your trading forever. And order block is more valid on higher time frames. So the last bullish candle before price fell, right? The last bullish candle before price fell is called bullish order block. Sheesh, look at this guy. So now this was the last, let me remove this thing. So you understand what happened just here, why I said let's us get in on this trade. One of the Confluences, this was the last bullish candle before price fell, right? That candle, when price got to that place again, what did he do, please? He fell again. So if you had waited for this higher place, let's say because this was where price got to before it fell, if you had waited here, you will not see anything and enter. This was first entry one. This other block here, entry one. This was the last bullish candle before price fell. So when price came there again, it fell. That's entry one. Please follow me. Entry two, the last bullish candle before price fell here. When price came up there again, it fell. So when if price fails to make a lower low, then I'll close out on my trades because it means that this is forming inverted head and shoulder. Look at inverted head and shoulder. But if price can break below this lower low, then I will add on new positions also. The reason price is going up is because this was the last bearish candle before price went up. So it has to react from that place. Definitely, price has to respect it. Sorry, hold on. So this was the last bearish candle. So that pressure there, the last bearish pressure before price went up, is where price is reacting from right now. That's why you're seeing price going up. But if price fails to make a lower low, I'll close out all my positions. All my positions that I have open, I'll close them out because it has failed to make a lower low. So it's respecting this particular left leg. There's something called head and shoulder pattern. So this is inverted head and shoulder. So price just came to rest. This is leg 1, leg 2, leg 3 for a buy. So if price can do that thing that he's trying to do right now, honestly, I'll close out of my trade. Honestly, I'll close out of my trade. Why? He's telling us that price wants to reverse and start buying. Don't trade what you think. Trade what you see. This is important. Don't trade what you think. Trade what you see. What are you seeing? Trade it. Don't trade what you think. If you're expecting a sale and price does not sell, I've lost your money. So trade what you see, not what you think. Ignore what you think, please. What you think is just limited. So trade what you see. Trade what you see. Then demand zone is an area of the market where price failed to go further down, thus rose from. That's support. Then bearish order block is the last bearish candle before the massive rise in price, like I just highlighted here. So this is what you need to know about smart money concept. However, you don't just pick smart money concept alone. You have what? Confluences. When I say confluence, what do I mean? My Fibonacci is one of my major confluences. So pick your Fibonacci from this swing low to that highest point, swing high. Sorry, swing high to swing low, not swing low to swing high. If you want to pick a sell, you pick it from swing high to swing low for a sell. Right? So from here to this particular low here. So if price comes into my 70, any of my highlighted Fibonacci areas, right, they must align with my order block. So this is my order block here. This candle is my order block before the sell. So this candle here, right? Follow me very well. This candle here, the price reacted from the 705 Fibonacci. So because all of my areas align well inside my candle, inside my order block, any of them works. Any of this area is called premium sell. If it's for a buy, any of these areas is called premium buy. So any of this is premium sell and premium buy. I don't use 0.5, 0.3. They are useless to me. All of this is what I want to do. You always want to sell high and buy low. Sell as high as possible, buy as low as possible, my dear. So same thing here. If you're picking your Fibonacci again from here now, swing high to swing low. All right, swing high to swing low. But right now, this is not our swing low. This is our swing low here. This is our swing low here, right? So this is our swing low. And then this is our order block. What did price do, please? Follow me clearly and carefully. What did price do, please? Price came and tapped into our 88.6 Fibonacci level and fell down. So we sold at a premium. All right, we sold at a premium. We sold at a premium. So you don't just pick order block as your only confluence. No, use order block with confluence of other indicators or other tools in the chart. One of my greatest tools I love to use is Fibonacci. I love to use Fibonacci very well. So I'll resend that Fibonacci video for you to watch and learn how I use the Fibonacci to get consistent profits in the Forex market. Like I said, if this guy can break above this high, then it means he's going to buy. So I'll just close out of my trade. I don't mind closing out to a little loss. I don't mind. But if it fails to do that and goes below, then that means this is a new order block he's trying to create. This white candle now. If it breaks below it, that will be a new point of entry for after a retracement. Remember what I said, the last buy before the massive sell. So if you can break and go below, when it comes back there, like now, just watch what will happen when price comes into this place. People should just look. This last sell, sorry. The last sell before the massive buy. Last sell before the massive buy. When price comes into that page, just watch what price will do. This is liquidity to be cleared off. Liquidity to be cleared off. So when price comes and falls into that place, it will buy for a moment because this is liquidity 1, liquidity 2. And this has showed us confirmation for a buy. I think I'm not going to sell again. I think I'm going to buy when price comes here. I'll close out on my trade and buy because this is liquidity 1, cleared off, liquidity 2 cleared off, comes here, this other block, let's pick our Fibonacci. So you see that this is so clean, this is a clean buy. I don't think I'm selling again. I don't think I'm selling again. I think the trend wants to change because there's broken structure, come to clear liquidity. It's forming a pattern for me, and this is W. This is inverted shoulder. This is one leg of W, coming to form second leg of W, and then my other block is from 79 Fibonacci to 86 Fibonacci. So I think I'm going to buy, honestly. So I just have my confluences, and like I said, I'm not right in the market. I'm not wrong in the market. Anything can be done. But if price can come there, I'll close out on my trade. Whether if it breaks below, then I'll re-enter. But when it comes there, I'll close out first. You have to secure your money. Remember, secure the bag. It's very important to do. Do you use the Fibonacci from body to week or week to week? Week to week, please. I ignore body. Week to week. Why are you leaving money on the table? Pick it from the week. Week means price went there. Body means price went there. So why not pick the week also? Don't leave money on the table, please. Pick the week to week, right? So basically, that's just like the structure of this GBP right now. I like to analyze only one pair. I can do any pair, but I like one pair because I know I have a relationship with GBP. He knows me, I know her. We are good friends. We're dating some time ago. We broke up, but now we are together again. So basically, I just want to like stay with the pair and then understand what the pair is all about. All right. So that I don't just look like like as if I'm cheating on her. You know, she loves me and I love her too. We're good friends. We are not offending each other, except that there was a time she was making me lose money. But we are good now. All right. So just pick a pair, stay with that currency pair. It will take time, but you eventually get a hang of this. You eventually get a hang of this. Okay. Now look at what I said. If price goes below and closes, that place is a new order block, and that's what price is coming to do. All right. So when it comes here, I'll close out on my trade first. Then if it goes up again, then I might not think of selling. But for now, I'll close out on my trade. But this liquidity I'm seeing, liquidity 1, liquidity 2. Liquidity 1 was cleared off. Liquidity 2 is coming to be cleared off now, right? Liquidity 2. So what decision will I make on GBP/USD? Any decision I'll make on GBP/USD, that's either break below this particular place or break above this place for me to make any decision. I don't want to trade inside this zone again. So when it comes here, I'll close it. If it goes out, then I would think of a re-entry. But it has to do one of them. Break out of here, I'll buy. Or break below here, I will sell. But if you're inside the zone, I'm not going to do it again. Because I don't want to hurt myself and burn my fingers. All right. This is a bearish engulfing. More sales, less buys. But like I said, you don't know what market is doing. This is London session, not New York session. London session, I observe that they're very manipulative, more manipulative than New York session. So you just have to be careful. That's just it. Just have to be careful. I noticed that most of the analysis has been on 15 minutes or 5 minutes. That's the best time frame to use for now. Oh, so I'm scalping. So this is how I chart. I'll show you top to bottom analysis. In the morning, I come and check the daily time frame and see what's the sentiment of the market. Market is bearish, right? So I'm looking for opportunities to sell. Okay. Look at how the previous day closed. Previous day closed with a week on top. Meaning later in the future, price will come and cover that week, right? That's the liquidity void that this our brother was telling us about, right? Then I go to the 4 hours to look at what the overall sentiment is. This is imbalance that needs to be filled up on the 4-hour time frame. So this imbalance that needs to be filled up, I'm expecting that price falls down here. That's why I picked out my trade and sold, because I'm expecting price to fall down up to this liquidity point. What I'll do is my 50 standard, I'll close out 45 standard and leave 5 standard open, right? Because I'm still expecting the price will fall down here. If I lose 5 standard, at least it won't really pay me as much as when I lose, or if I lose 50 standard on the 10 piece rather, right? 50 standard on the 10 piece, that's 5K, just so you know. Yeah, so this is liquidity that needs to be, this is imbalance that needs to be filled up. I'm still trusting the sale though, but no one is ever right or wrong in the markets. Just be careful. Then to see what the real-time market is doing, I look at 5 and 15 minutes, that's just it. So I want to see what the market is doing right now. What structure is it forming on the lower time frame? That's what I want to see. So I'm scalping. I'm not here for 1 year, 2 years. No. I'm just scalping to see how I can make some profit and pack out. Then basically that's just what I do. But I look at the overall bias of the markets. Then every new week, like over the weekend, I'll go to weekly time frame, monthly time frame to do my complete top to bottom analysis. Don't worry, we're supposed to do top to bottom analysis today, but we won't do it. All right, we'll do top to bottom analysis another day. So just to see the real-time activities of the markets, that's why I look at it from this place, right? So if you understand what was taught today, honestly, drop 555 in the chat. If you don't understand, honestly, drop 222 in the chat. Please be honest with me. You understand, drop 555. You don't understand, drop 222. You understand, drop 555. You don't understand, drop 222. 555, 555, 555. Don't drop 5 because everybody's dropping 5. You understand, drop 555. You don't understand, drop 222. Okay, you don't perfectly understand, drop 777. I understand, but I don't perfectly understand. Drop 777. Okay, 777, 777, 777, 777, 222, 777. Oh, now you are talking. 777 everywhere. Hey, wait. 777 everywhere. All right. So what we do is this, right? You'll be grouped into, you'll be divided into groups. Then those that understand, I know those that understand. So I would like make them maybe 4 or 5 of them. Let them be in different groups so they can assist you, right? To learn it, right? But what you want to do is to go over this video again. This is it. If you watch it, I'm honest with you now. If you watch this particular video 10 times, it's an hour long or 2. Actually, it's an hour long now. If you watch these videos 10 times, just this video 10 times, it is long, but if you can watch it 10 times, you will understand. I'm honest with you. Repetition beats mastery. Why? Because you deceive yourself that you understand, even when you don't understand. And because you deceive yourself that you understand, you eventually understand. So repetition beats mastery. Trust the process, learn it. Just trust the process and learn it. Basically, trust the process and learn it. You understand, honestly. It's so simple. It's so simple. There are some important things that need time to process, and they are so important. Yes, now I didn't understand the other block. Don't worry, your time is drawing near. That's true. Thank you so much. Thank you so much. I need to leave now, actually. Will you be dropping this video on YouTube channel today, please? Yes, I'll drop it. After this, I'll download it. I'll save the recording and upload it on the channel. Let's say in another 30 minutes or 1 hour. By God's grace, I'm not promising, right? I'm not promising by God's grace. So once that is done, I'll share the link on the group. But it will be on the channel today. Just be assured that today you'll see it on the channel. Watch it at least 5 times. Yeah, I'm telling you, watch this video 5 times. It's not possible that you will not understand. So what we'll do is tomorrow we'll discuss on candlesticks pattern, and we'll also discuss on top to bottom analysis tomorrow. Candlestick pattern and top to bottom analysis. All right. So I love everybody, honestly, and I'm doing this thing only because God told me to do it. Normally, you people know me. You pay big money, like serious money. But God told me to do it. Give these people, they need the information. So that's just why I'm doing this, right? So just make sure you're committed to learning, because it's for your good, not for my good. Yeah, for my good in a way, for your good more, because you're learning and you're going to be profitable in the market. Market is simple, it's ready to pay you, but you just need to stay committed, stay with the grind. Don't give up, stay with the grind. If I'd given up, guess what? I won't be here today, right? I'm not where I'm supposed to be. I'm not where I'm going to be, right? But guess what? I'm on track, and that's what's important, okay? So I love you so much. I love you. I love you. I love you so much. If you have any questions, please reach out. If you have not watched Module 1, 2, 3, please go and watch Module 1, 2, 3. It's very, very important. Very important. Module 4 also, watch it. Very important. And this Module 5, this is fire. Watch it. I'm grateful to God that God showed up for us today and that God taught us by himself. Okay. So please write all your thank you and everything on the group. Not here, please. I've seen all the thank you. Let them know that they missed out on something actually. Go and write the thank you. Go and write the we love you. Go and write everything on the group. Not here. Have a great time ahead. Cheers. And yes, this GBP enjoy your money. Enjoy, withdraw, buy Pepsi, drink. The thing is, if you want to exit your trade now, you can exit it though. But if you think you want to leave it, you can exit most of it and leave 0.01 open if you want to. But me, I'm going to exit when it comes to 684. That's 1.22684. When it comes there, I will exit. I have 50 standard open. I will exit 45 standard and leave 5 standard. Then I'll shift my stop loss above this previous order block here, which is like 8.9. So 6.8 to 8.8 is like 20 pips. So I'll just keep it like 20 pips stop loss for that 5 standard. I'll keep there, right? And let allow whatever happens to happen. But this was a nice trade. Everybody ends, everybody profits. Forex is simple and easy. Man, cheers, everybody.